Good day again. This is Seewing Yee, and today's my video is I'm going to use this scenario. I'm going to pretend I woke up from a coma after in the past 3 years. Okay, I'm fine. I'm healthy. I have a good financial situation. I can qualify to become a real estate investor. I will share with you, take out all the emotions, take out all the negative headlines, take out all the doom gloom realistic data from clickbait, house crash, porn videos out there and all the negative headlines out there perpetuated by the mainstream media. This is going to be a fun presentation. With that in mind, let me share my slideshow and here we go. Again, pretend I woke up from a coma after 3 years and I'm pretty oblivious from what has happened in the housing market. I just gather up all the current credible data out there. And then in about 15 minutes, I'm going to draw my conclusion based on authentic, hardcore, unbiased, credible, accurate data from the most credible sources out there. Let's go for it. Let's see how it is. We are seeing data according to Lawrence Yu, the economist for the National Association of Realtors. Currently, as we speak in July 2023, 5 reasons the housing market is not crashing. Inventory right now at a historical low, and builders didn't build quickly enough to meet the demand in the past 13 years. Demographic trends are creating a lot of new buyers, creating pent-up demand. Lending standards are very difficult. Only the highest quality individuals qualify to get the credit. And foreclosure activity is pretty much non-existent in this economy. Again, economics 101, right? Economics 101 is demand is greater than supply. As in clearly in this case right now, then housing prices will go higher. And that's what we have seen throughout 2023. We have seen skyrocketing home prices nationwide this year of approximately 10% growth appreciation from past 6 months. And of course, it can't sustain itself for the remainder of this year. We expect the housing market, the prices will stabilize for the remainder of this year with seasonality. And of course, coming toward the fall and toward the end of each year, we always have less transactions for various reasons. Of course, housing shortage. You cannot argue about the housing shortage. This housing shortage will continue to occur for the next 10 years. According to many experts, because of shortage of homes and pent-up demand for the next decade and beyond, there will continue to be a strong seller's market. Sellers are dictating the marketplace. So as a result, buyers is at a mercy of any limited amount of sellers out there moving forward. So it's a huge housing shortage crisis. We have never seen a housing shortage of this magnitude. It takes a lot of things to happen in the next decade to get us out of this housing shortage. Furthermore, because I'm a real estate investor and I'm trying to buy investment property, this is the theme of this presentation. Although primary home buyers, there's always nothing wrong to buy a primary home as long as you qualify, you have good financials, you're ready to buy long term and all that. I'm talking as a risk investor because of the skyrocketing home prices in past 2 years and the elevated mortgage rate around 7% right now as we speak. A lot of people are being priced out home ownership and those people are becoming renters. We are seeing the highest rental market, more renters than ever before in history of the earth. The rental prices are escalating due to the shortage of homes to buy and shortage of homes to rent. So as a potential or current risk investor, you're going to make a killing with cash flow and with good renters, lower vacancies, high occupancies, and high quality tenants that occupy your house, assuming your house is a good area in affordable areas in the Midwest and South and Southeast. That's the primary areas most investors should pull their trigger. Rent growth, high inflation environment create higher rent growth. So you can collect more rent as a landlord, you can collect more, increasing your rent systematically speaking based on inflation. Then take a step back from a historical basis. The only time the housing prices did not rise was during the 2008 economic and real estate housing crash from 2008 to 2010 or about. So here are the charts. And of course, there's a slight dip last year, last 6 months of 2022 when there are some decreases in home prices, especially in the Western Coast region. But the decreases in home prices was more than made up for the first 6 months of this year. As you can see, the trends have moved up accordingly home prices this past year. So long term, ever since 1965, we're talking like 65 around past 57 years, real estate has been consistently going up in value. Okay. Again, for the past 57 years, the only major decreases in home prices occurred in the 2008 crash. Every other year have consistently grown. Just to show you the long term, if you buy a property for the long term, you will increase the value of your home. That's history and that is the reality. That's the truth. All right. So again, renters are staying longer because they can afford to buy until a lot of things happen. So as a landlord, you are taking a killing, renting your house, and way more than renters don't want to knock into your door to rent. Multiple bidding wars for renters to rent your home in a good area. A lot of recent surveys indicate that a lot of people are staying on the sideline. They cannot afford to buy. They're scared to buy a home to live. So they are becoming renters. They will be your tenant if you are a potential real estate investor. Housing shortage will continue to persist for years and years to come based on pure accurate data, and Alto's research also indicates that the asking rents there's a dip recently, but a year and a half ago, the rental rate increases in certain markets have increased 20, 30, 40%. That's what's happening now. The rental asking rents has been steadily increasing in alignment with the inflation. So uncertain economic outlook or keeping people on the sidelines so they need to rent. They have to live somewhere. They might as well live at your rental property. So rental will make you rich. That's the bottom line. Right? They're paying all your debts. And we look at the wristband showing that even though there was slight home price decreases in the latter part of last year, has been more than make up, offset completely during the housing price increases the first 6 or 7 months this year, 2023. So it's a wash. And of course, the weaker supply back in May 28th is 10.7 weeks. That equate to a little bit less than 3 months supply of inventory nationwide. So this means that virtually very few homes for sale out there, and they're creating a lot of buying frenzy as we speak, even at 7% interest rate. And of course, there's a lock-in effect. Most of the homeowners right now, 80% or so, have a mortgage rate of less than 6%. And a lot of home buyers, 40% of the homeowners right there have no mortgages, and 25% of the mortgage holders, homeowners right now, they have an interest rate of less than 3% or less, and they're not going to sell their home to move up to buy a new house with a 7% mortgage, essentially doubling their mortgage payment. So they are sitting tight. They are locked in. They're going to be locked in for a very long time to come. Therefore, supply of inventory will persist as long as the mortgage rate is at an elevated level. And most mortgage homeowners, they are not going anywhere, that are resulting in severe historically low inventory levels. You can see the graph clearly show the number of millions of people have this type of mortgage rate. They are not moving. Okay, they're going to stay at their home. They're going to stay home for the next 28 years, whatever. Then finally, someone give me some rental properties to analyze. So again, bear in mind, I woke up from this coma 3 years ago. And when I wake up, I see these numbers. I see, should I, as a risk investor, buy a property? All I know is what I know based on current data. I did not look at all those doom and gloom crash bros video out there. And so as a result of the great data I just shared with you, very accurate, very credible. I see one of the property Midwest, Buffalo, for example, shows a property listed for $67,000. Rents for $825 per month. You do a 25% down payment, even at a 7.5% mortgage rate, you still achieve monthly cash flow. That's good enough for me. I ride the cash flow for the long term. And then when the housing market corrects itself, everything will come place. Of course, by being a investor, by being a landlord, I'm getting much more than cash flow. I'm getting appreciation, increasing rent over time, tax benefits, and leverage the loan. I can always catch up refinance when the rate decreased from 7.5% for investment rate right now to 6% or 5.5% in the next 2 years. I can catch up refinance and increase my cash flow, and I invest for the long term, 10, 15, 20 years, and I will achieve my definition of financial freedom. That's just one market. Another market in Alabama, Tennessee, shows some very desirable turnkey ready homes, renters in place, very good cash flow, everything else, very reasonable prices. You're not going to see these kind of prices in the low to mid 100s, and professional property management, the whole 9 yards. You can help you do your properties by remotely, passively, wherever you are located in the country. So look at all these great deals out there. Tremendous turnkey or rehab, cash flow, long-term growth in Alabama in terms of the markets. As you can see, the ROI numbers, the home price listing, and the rent range. So all the numbers make sense. Based on the pure data of the numbers, it just really makes sense. And another one, a nice rehab home for 190K, rents for 1600. Upon further research with the rental meter software in the 2 mile radius of this neighborhood, same square footage, what have you, the rental comps come in recently around 18, 19, even $2,000. So this rent projection is very low. Of course, I'll show you the rent projection could be conservative at times, but when you do further research, the numbers are much more attractive than this so-called pro forma projections. Just to show you this kind of deal, this typical example of this particular deal is very attractive in every way, shape, form. All right. And then let me skip over. Yep. This is the rental comp on that particular property. So you look at the square footage, 1900 square foot will get you anywhere from $1,800 to $2,000, as you can see. So the cash flow is extremely attractive. And by the way, this builder in Alabama, they can add on $200 monthly income to your pro forma for the next 24 months. It's sort of a seller's incentive. That's what you're getting. You're getting a builder's incentive. You're getting a seller incentive as a real investor. So just add on to your bottom line. So another property, Alabama, actually, this is the pro forma associated with that property. So look at this projection, monthly net cash flow over $600, even on a mortgage rate of 5.75%. Presumably, you can buy down the rates, or you can, as an investor, you can get this kind of 30-year fixed rate mortgage at around a little bit less than 6%. You juggle the numbers, you look at the projected rent, $1,850, for example, minus all your monthly mortgage and your other debt obligations, still equal a whopping almost $600 monthly cash flow. Business mind-boggling. Of course, the seller can give you $200 per month in addition, above and beyond the rent collect. For the next 24 months, they give you this additional incentive. So add on the $200 from this $589, you get what? $789, almost $800 monthly cash flow, at least for the first 24 months. Mind-boggling numbers, and this is it. So let's continue. Of course, some builders require new construction in the select markets in Florida and few other markets. For example, the building incentive, I don't know how long this is going to last. You're getting 4.99% 30-year fixed rate mortgage as a real estate investor in certain new construction markets in Florida. Mainly, it'll increase your cash flow by several $100 above and beyond your regular cash flow to get. This is an example of it. This property in Florida, $325K, rents for $2,400, which is amazing. 25% down payment. At the end of the day, you're getting monthly cash flow is $423. It's very attractive. You get the message. Again, I just woke up in a coma and I look at the data. I look at the investment opportunities. I look at the cash flow analysis. There are plenty of opportunities to do well for long term, that is. So really, to me, it's just a no-brainer. Again, based on the scenario I just shared with you, any person with a logical mindset, do the research, who can qualify. It's never a long time to buy real estate, to buy rental property, that is. As long as you do the research, buy in the right market, an affordable market, you do the research, and you surround yourself with a a team of great turnkey providers that are credible or honest and transparent. You can hook up with those kind of teams and you become a very good long-term investor, regardless of all the crap out there. You've been hearing all the no negative headlines, the world coming to an end, crashing this, crashing that. Look, just ignore all those things you can't control. Let's pretend you are in a coma for the past 2 years. You didn't hear any of those negative headlines out there. You don't watch YouTube videos and those clickbait crash blows out there who just try to destroy people's American dream, if you will. So just look at pure data. Example, I just show you. There's never wrong time to buy real estate, what I call the dollar cost averaging. I keep buying properties regardless of the economic conditions. I buy the right market. I buy the cash flow markets, as you can see. So I continue to buy. A number of my investors continue to buy based on the data I just shared with you. And this kind of data are credible. They cannot be disputed. That's all I have to say. At the end of the day, pull the trigger, take action. Whenever there's a crisis, there's an opportunity, but knowing that you have invest for the long term, regardless of short-term volatility, as long as you collect your cash flow, you collect your rent, you're getting the apartment cash flow, you just stay the course. And eventually, real estate will work itself out. So rental rate increases, tax benefit you get a leverage of an amazing 30-year fixed rate mortgage, which no other country in the world have this 30-year fixed rate mortgage, will help you create wealth. Your appreciation will increase anywhere from 3 to 5% or 7% annually, depending on what you buy. When you stay the course and buy for the long term, buy right market, so you're going to become an amazing wealth builder. All right, that's all I have to say. If you see a lot of value from this video, please smash the like button and subscribe to my YouTube channel. And finally, please subscribe your email into our website below so you become a investor insider within our real estate investment club. And so you become our member on a weekly basis. You will receive free real estate investing education directly into an inbox. We'll show you some practical information and we'll show you some investment opportunities similar. I shared that with you on this presentation. Hopefully enjoy your journey into your wealth building strategies, action plan. Thank you so much. This is Seewing Yee. Thanks for watching, and I'll see you on the next video very shortly. Have a nice day. Bye-bye.